Ever since I bought this home, I have made it a goal to let people know some things that I did not know about purchasing a home. Although I had a lot of information, there are still just some things that you have to experience. So today I have a mortgage loan originator, as well as my sister, who has already been on my channel, Monica Greer, who is a realtor, who are licensed and qualified to help first time, and also they have made it their mission to help first time home buyers. And this is just a guide on how to make home buying as a first time home buyer, as a self employed person, or as a person who is a W 2 employee, just to make that experience easier and more knowledgeable. Mr. Shedrick,
Yes.
so tell me, what is a, what are you called, a mortgage originator?
Yes, mortgage loan originator. So, what a mortgage loan originator is, my main job is to gather loan documents from clients, pull credit
Mm-hmm.
to get you qualified for a home. So, I look at credit, look at income, look at assets pretty much all day, putting that puzzle together to let the people, clients know what they can be approved for when in reference to buying a home. So, that's what, in a nutshell, what I do.
Yeah. So, what made you want to do that with your life? When you were saying, I want to be this when I grow up, why that?
That is a great question, actually. When I was younger, I always had a fascination with money and numbers, more so than money numbers. And the reason why I like numbers is because there is no gray area, right? Two plus two
Hmm.
is four, no matter how you slice it. So there's no argument, no debating on that. So I went to college for finance. So I have a
Yeah.
finance degree from the University of Alabama, and then went back to get a financial planning degree from the University of Alabama.
Hmm.
Started out doing not what I'm doing now right out of college. And by the grace of God, I got pushed into mortgages, and this is where I landed. And I've been doing this. January will be 18 years. January the 2nd will be 18 years. I don't remember dates often, but I remember the date I quit my last job, and it was right after New Year's, and I started doing mortgages with no clients or anything else. So that's how I it was. I guess I was born to do mortgages, but I was pushed into the business.
Yeah. So, how do you know Monica? How did you all meet? Monica, you want to introduce yourself? First of all, Monica has already had an episode on the channel, so she's a pro to this, okay? She, what do you call it? A self-proclaimed celebrity that we are all how to and to worship. So,
No,
princess, that's what our mother calls her. Princess, why are you here? How do you know Shedrick?
I just want to clarify a few things. I'm a self-proclaimed chef. I'm a self-proclaimed chef, and my mother
Uh-huh.
does call me princess. But one day I was looking for a loan officer who actually worked with self-employed buyers. So I reached out to one of the agents with Keller Williams. So Mia Rooks, I want to give her a shout out. She's a fellow agent in the Middle Tennessee area. I was like, hey, who do you use for self-employed buyers? She was like, hey, I use Shedrick. And so I set up an appointment, and we met at Franklin's Fruit Tea. And I think I brought one of my other colleagues around. That was a few years ago, and we've been working together ever since.
Uh-huh. Okay. So, also people, anybody who's watching, this is going to be a little bit messy because I don't know how to do this, so I'm doing it in real time, okay? But let me get to my questions, all right? So, you work primarily with entrepreneurs, or do you work with all people trying to buy homes, Shedrick?
I work with all people trying to buy homes, and that's the good part about it because
Mhm.
um, I can not only I'm not limited to one set of people to help. Like I can help
Okay.
self-employed bars, people that just fresh out of college, never bought a home before. So it's a broad range of people that I can help. So and I've been in it long enough to kind of specialize in each group of people. I love helping all groups. I have a soft spot for first-time home buyers, honestly.
Okay. Okay. So you said that you can help people coming right out of college. Do they have to have a certain amount of money or savings or because I ain't have no money coming out of college, barely got money now.
Yeah, well, it's programs out there to help everybody.
Mhm.
So we have down payment assistance programs.
Mm.
So you don't have to technically have any money for your down payment, and you get a great agent like Monica, Princess Monica.
Good
I'm
job,
going to
Shed.
use that from now. Thank you so much for giving me that. Okay. Thank you. Thank you. Thank you. So Monica can negotiate the closing costs paid or most of it paid. So technically, you can get. I just had a loan close 2 weeks ago, and the person got their earnest money back. So they basically didn't put any money besides paying for the appraisal back into the transaction. And to go back to the initial question, you
Mhm.
can be right out of college. Say you went to college to be a nurse,
Mhm.
and you've been in. You have to have a 2 year history of working, but your 2 years can be in school. Now you're a nurse, and we can give you credit for your nursing income, and there's your income to qualify.
What is on the on the channel for this little season that I'm doing, it's about entrepreneurship.
Mhm.
So these are people who are self-employed, who may have big thriving businesses or may have really small businesses or maybe starting out. What kind of pre-approval process do they have to go through?
So it's two different processes
Mm-hmm.
if you're self-employed.
Mm-hmm.
Most of the times, the one thing is if you're self-employed, you have to have 2 years of business income. So we have to look at your tax returns,
Mm-hmm.
right? Um, and what we'll do is we'll average the tax returns up over the last 2 years, how much your business made after losses, and then that's how much we can give you credit for.
Mm-hmm.
I'll say sometimes the business doesn't claim as much as they're supposed to.
Mm-hmm.
So we can do what we're called a bank statement program or
Okay.
profit and loss. So basically, we can use your bank statements, or your accountant or CPA or tax preparer can give you a basically a letter stating what you brought in for the last 12 months and what you paid out for the last 12 months. And we can use that as your income to qualify for the self-employed profit and loss or bank statement program. So it is more ways. And again, that's being with Southwest Funding, we're allowed to do that, and a lot of banks are not. And we want to get the word out for people that just because you're self-employed doesn't mean that you should not think about buying a home because you can, because it's more options than one.
Okay. And what is the difference between pre-approved and pre-qualified for those who are looking?
Great question. So say you call me today
Mm-hmm.
and I pull your credit,
Mm-hmm.
and credit looks great, and you say, okay, and I ask you some questions like I ask everybody. All right, your income. Give me a little breakdown of your income. You tell me how much money you have saved. You'll tell me, and maybe send a couple of those documents off. I can pre-approve you then based off some of the stuff that you gave me.
Mm-hmm.
Pre-qualified is basically now I have everything I need versus the what you gave me verbally, and we've got it all together, submitted over to underwriter. The underwriter has reviewed those documents, and now they have given you an amount that you now you got a solid approval because the underwriter has looked at it, and
Mm-hmm.
now these are the conditions you need to close the loan. So one is a kind of a quick idea of seeing what you where you are. One is a deep dive, and pretty much everything, all the I's is dotted and the T's are crossed to get you qualified.
What is an underwriter?
That is a great question. Most people think they are a mythical figure, right?
It sounds like it.
A bad, like a ghost and a haunted
Undertaker.
house.
It sounds like Undertaker.
Well, it could be depending on your situation. Yeah. So I get your information. You ask all the questions what I do, right? You come to me, I get your information. I said, hey, you're approved for this amount. Now I get your information and submit it over to the underwriter so they can review the information to tell you. to tell me to tell you if you're really qualified or if did they find anything else. They are independent, right? I work for you. Their job is to make sure that everything is in there that it's supposed to be.
Okay. So they're like judge and jury, essentially.
That's that's a great way to think of it.
Okay.
And hopefully you can get off.
Oh, you need to. I don't know, because some people don't need to be buying a house if you can't afford it. Because one thing that and maybe Monica, you do this, but that I wish more people would talk about is, okay, maybe yes, you can buy the home, but it seems like owning a home is cheaper and renting doesn't make any sense. But then you have to think about if something breaks or if you need to replace anything, then you are responsible for that. And I think sometimes people don't factor that in. Is that something that you all try to coach your clients about, or even
No.
furniture, like furnishing the home?
Right.
I definitely would like to take that question because I see that a lot on social media. And this is where having a great real estate agent come into play, because a great real estate agent will let you know that. So when you're renting, you have a maintenance man. You call the front office. You tell them that something is broken. They send someone out. Once you become a homeowner, you have a maintenance man. It's called your home warranty plan. So if anything breaks in my house, I file a warranty claim. I pay $100 and things are fixed. Um, when it comes to buying and renting, I'm still a heavy advocate for buying a home. Even if you got into that home, you say, hey, this home is no longer affordable for me. I want to move on and rent. I have clients now where they purchased a home, they've decided that they want to rent for a little while. Well, if you decide to sell that home, you're going to make money on it that you will not make renting your landlord's property. So I still always feel that home ownership is a better option as long as you are not going in above your head. I think Shedrick and I, we had a client where they stayed about $200,000 below their budget. A lot of people tend to want to max out their pre-approval amount instead of going in saying, this is what I can afford. How much will this house be? And then you kind of stick into that budget. So it all plays a big part in who you work with, really definitely does matter. And working with Shedrick and I, it matters. We are the dream team.
We are, and that is right. Because another thing people don't realize is we give you credit for your gross amount before taxes are taken out. So you're really not making the amount that we're giving all loan officers give you credit for. So you need to work with the dream team, princesses and I. Uh, um, to and we've talked to people like, okay, you're at the height of your budget, these are your payments. So you want to tell them this is what your payment's going to be, right? And always say, hey, I'm going to help you to the end, but when the payments start rolling in, I can't help you on that. So you got to feel comfortable what it's going to be, because it's like the new car. You love it, love it, love it until the second or third payment, like it's the worst thing. It's the worst thing ever. So, the last thing that we want to do is be, you stuck me into this, you forced me
Mhm.
into this. No, we want to make sure that you are aware of everything so that you can be okay with the payments after we're gone. And one thing Monica does, and I do as well, not as great as she does. I hate to give her props on this, but we do follow up after the transaction to make sure that you're okay. Every 6 months, every year, you need anything, everything's okay, you want to sell it. Because one thing that people do, if you get into a situation with a home, like foreclosure, like you're going to lose your home,
Mhm.
instead of just letting it go into foreclosure, you can sell it and get 50, 60, 70, sometimes hundreds
Mhm.
of thousands of dollars. But your pride get in the way. You don't want to call. So, but if we establish a relationship with you that we're not just a business person, we're an advocate for you and your friend, that you'll be open to tell us like, hey, the payments was a little bit too much. I lost my job, but spouse passed away, something happened. I want to sell it, and this is the money that you can get, right? So that's another thing there as well.
Yeah, that's really good because something that so I just Shedrick, you don't know this, Monica knows it, but I purchased my home. This month will be 2 years ago. So, well, I closed on it in November, but I signed on it. It was new construction in June of 2022. And so what I am finding is that my uh, property taxes are increasing a lot every year. And there's actually down the street, there's this property that is like dilapidated. It was built in the 1960s. I think it hasn't been in use since maybe 2007 or something because I looked it up. And it is now, someone bought it in December of 2023 for 300,000, and now it's on the market again for over, I think it's like almost $500,000. It's only a 1.3 acres, and you would have to tear down everything on it. It's literally like the building is just caving in. So what about that? What do people need to think about as far as when things around you are being built? Because a lot of businesses are also being built around me now
Mhm.
that didn't exist. So what about people thinking about that, like taking that into consideration too?
I can definitely take that one because I don't know if you remember when I bought the last house.
Hmm.
I bought it for under $200,000. When my mother first visited, she was like, "Oh my gosh, did Monica move to the country?" Because
Yeah.
nothing was there. But when
Hmm.
I got ready to sell it, I made more on it, like I netted after the mortgage was paid off, the broker who brought the buyer was paid. I made more on it. So for people who are actually looking for their property values to go up, or you want, because you want your property value to appreciate as a homeowner, you have to understand with appreciation that your taxes may increase as well. That's a part of it, and that goes back to what we said a moment ago. Don't max out your budget when buying a home. Try to stay at a lower level. The house that we're in now, I knew that I did not. I never wanted a $200,000 mortgage. I don't have a $200,000 mortgage now. So because I bought that first house, I was able to put down a significant amount of money. And we don't stay in a small home. I was able to put down a significant amount of money so that if something happens, I'm able to afford it. So I guess just making sure that you understand what home ownership is, how the values of things around you. Whenever you're moving into a new area or an up and coming area, there's going to be some appreciation. There's going to be some tax increases. So just making sure that you stay within your budget. Before you go out and look at a home, you need to write down, here's what I can afford. And don't let your real estate agent, don't let anyone talk you into going over that budget. And like Shedrick mentioned earlier, it's not just about money with me. If a buyer tells me, "Oh, I can't afford this, I'm not comfortable," I say, "Are you sure you want to buy this? Do you not want to go look at something a little bit less?" Because I would much rather have them as a forever client, someone that's comfortable in their home, versus me putting them something that they can't afford and then they're pissed off at me 6 months down the road, like, she made me buy this. So you have to think about that. That's just the name of the real estate game.
Yeah. And so do both of you work with buyers and sellers?
hmm So, well, I would, so I work with buyers, sellers, and investors. Shedrick will work with sellers if they're selling a home and buying a home. So the money that they make off that home, they may roll it over. But I work
Mhm.
with them in both Tennessee under Zach Taylor Real Estate and then Mississippi under Dorsey-Evans Realty. But the bulk of my business is first-time buyers. And a lot of those first-time buyers, they traditionally stay in their home 3 to 5 years. And at that point, they decide to sell and either upgrade, and then they become a seller and a buyer at the same time.
Okay. So I also, Mr. Shedrick, have a unique case where I work in the film industry. So I work, I'm a part of a union. So when I was looking to purchase my home, we contacted a loan officer, and I think she initially quoted me as for $60,000 or something, approved for $60,000. I was like, ma'am, you can keep it because what am I going to get with that in Atlanta, Georgia? Um, and so she got it together, and I think I got approved for maybe 300.
It was 350,
Um,
I believe. Yeah.
yeah, something like that. But I did not want to be anywhere near it because I never even wanted to buy a house. It just, to me, rent here is so expensive. But What she had to do was a lot of research about unions. And so she found a lot of information that was helpful to her and to me because I am a part of a union. So I guess that gives me a little extra cushion so I could get a more traditional loan. So, actually, what are the traditional loans? And do you work with people who are in unions or maybe in a similar situation to me?
Another good question. So a traditional loan are basically four type of loans. You know, people dress them up and say first time home buyers, that's this type of program. But a traditional loan is going to be FHA, where a minimum credit score of 580, conventional, where a minimum credit score of 620, VA, where, and this is for my company, the minimum credit score is a 580, or USDA, where the minimum score is 580 for Southwest funding.
Mm-hmm.
So what that means is a traditional mortgage is that we can verify everything the traditional way. Like your income is verified the traditional way, your assets are verified the traditional way, your credit is looked at the traditional way. So it can be sold to one of the bigger entities like HUD or Fannie Mae or Freddie Mac
Okay.
or rural development. So non-traditional, going back to what we talked about, like the tax, if you're self-employed, we can get a profit and loss statement from your tax preparer and accountant. That's not a traditional way, so it's a non-traditional mortgage. The only difference between that is the amount of the down payment is going to be bigger because there's more risk involved, right? If we're just going by nothing on file with the IRS, but just what your tax preparer prepared. So it's more risk involved for the investor or the lender. So the down payment is a little bit more, and the interest rates are typically they're a little bit higher as well. But it is a way to get you into a home. So when you don't have to, when you're doing stuff that's not traditional, what I stated earlier, if we have to do this and can't verify this, we have to go the non-traditional way. So the best thing about that, the greatest thing about that is no matter if you're traditional or non-traditional, you can get a house. So that's what I always tell people, that no matter your circumstances, you have to ask because you can probably purchase a home. I mean, oh, I'm self-employed and I haven't filed much on my tax return. There's an answer for that. Oh, I filed bankruptcy a year ago. That's an answer for that. So I think eliminating the fear of people and just speaking to a professional that you have your best interest at heart will help you
Mhm.
out. So that's the traditional and non-traditional. If you got something that's a little quirky, or that we even have loans, if you have $1 million in the bank, that can be your income, right? If you're trying to buy a house, if you have enough assets available to buy the house, but you don't have to buy it cash. So it's tons of ways to get you qualified.
Okay. And then, so tell me, how does debt factor in? Like if people have credit card debt or some kind of personal loans or something, how does that factor in?
The debt, the monthly payment is only the factor, right? Let's say you and I go buy an automobile, right?
Hmm.
You buy an automobile $50,000, I go buy one for 500,000, right?
Okay.
And our both of our monthly payments are $500 a month. We have the same debt, right?
Mhm.
Even though I'm buying a $500,000 car and you bought a $50,000 car, we go by the monthly payment. So whatever the monthly payments are on that debt, that's what we go by, unless it's an adjustable rate or something like that. And we only go by things that on your credit report, like your cell phone bill. We don't factor that into your debt to income ratios. Your
Okay.
light bill or gym membership,
Mm.
it has to be on your credit, or we don't typically factor that into your debt to income ratios.
Okay. All right. So I'm just going to continue to use myself as an example. So I live in an HOA community and it's really restrictive. As much as I love how organized and well kept everything is, it's restrictive. If you want to rent out the home or if you want to plant something or erect a fence or anything, you have to get permission for everything. So, and also, like I said, I'm working in the film industry. I'm not working right now in the film industry. So I don't technically have employment. Um, how, if I wanted to buy a home, but also sell mine, can you walk me through what a buyer consultation would be like for someone like me?
The first step is I always pull the credit, and I pull a soft pull because that's going to dictate, can you even buy at all? I look at the credit, then you say, hey, I'm not working, or and I give you your options. It's always more than one option. And if the loan officers don't give you more than one option, they're doing you a disservice, not a
Yeah.
service at all. Because again, like I said, it's programs based on if you sold your house, you got enough money from the sale of your house, you can probably qualify that way. Do you get any kind of other income, like you as a union? Do you get union income monthly, even though you're not working? I would have to listen to where you are to figure out what we can do for you because it's typically, not all the time, but it's typically a way to make the deal work.
Mhm.
Mhm. Okay. What were you going to say, Monica?
I was going to say I also do a buyer's consultation as well. And so when they reach out to me, I like to get a lot of preliminary information like, are you currently renting? If so, when is your lease in? Have you been pre-approved with the lender? If not, I partner them, with Shedrick. And then if they have any income, and the reason, I mean, if they have any money saved, I don't need to know the amounts. I just want to know if I need to negotiate X amount for you, or if I need to be more aggressive with my offer when asking them to pay for that. If they come to me and tell me, hey, they're not working or whatever the situation may be, I never tell anyone that they cannot be a homeowner, that they cannot buy a home, because anything is possible. But I do partner them with the lender, send a summary of our buyer's consultation, and then I let the lender kind of explain where we are, and then together we work to collaborate on how is the best approach to get them in a home.
I have just one more question. So now that we have maybe gotten the loan, what are the steps to closing on the home? How long does it take? All of the things. Okay.
Every situation is different. Even if you bought 20 houses, it's going to be 20 different scenarios.
Okay.
So you get qualified, you get the documents to me. I get you pre-qualified. Monica goes, shows you your dream home. She send that contract over to me. It typically takes 30 days to close on the loan.
Okay.
And if you never bought a home before, you're like, why so long? If I want to go buy that $500,000 car that I've
Mhm.
just been dreaming of, I can go get it today.
Yeah.
Even if you had cash, you couldn't buy a home in a day because it's
Hmm.
so many things goes into it: title work, appraisals, underwriting, all the things that we talked about. So it typically takes 30 days for all that stuff to mesh together to get the funds to the closing table. Um, Again, the process of buying a home is the most unique process when purchasing something ever. Because if you wanted to buy a house, somebody wanted to sell me their house for $50 today. I couldn't give them $60 and say it's mine today. It
Mhm.
is a process like no other, but the process is to protect you. So if something happens, you own the rights to that property, reference to title work and things of that nature there. The mortgage is set up the way it's supposed to be so that it won't be any issues on the loan and the back end. But it typically takes 30 days for all the craziness behind the scene that myself and Monica will have to do to get you into that home.
Monica, you had anything else?
Well, from my regard, in addition to what Shedrick mentioned, we also have to do home inspections. And if something comes up on that home inspection, we may have to bring like specialist, foundation, electrical, etc. But a home inspection period is about 10 days. We also have to collect that earnest money, and a copy of the earnest receipt is also provided to the loan officer. And then we do a termite inspection, which is separate from a home inspection. But that inspection process is about, just say, 10 to 15 days max, but I usually have mine around 10 days. But so we do need at least 30 days, and I try to write the contracts for 30 to 35 days just to give a little bit of grace period.
You should always have a home inspection, even if it's new construction.
Yes. I've I've only had one client in my history that did not have a home inspection. Every new construction home that we have inspected, there's something that comes up, because you got to think about it. Nobody is perfect. The builder can be the best builder, number one builder in the US or what have you, but they hire subcontractors, and somebody needs to come behind them and inspect the work. And you want to take care of those issues at the beginning so that they're fixed and don't become bigger problems down the road. So I wouldn't buy a home without a home inspection.
Okay. All right. This is fantastic. So, where are you all? Like, I know Shedrick, you service like 72 states. Would you like to list them? Would you like to list them?
Okay, I will list them. I'll list them in alphabetical order. Okay. Alabama, Florida, Georgia, Indiana, Kentucky, Louisiana, Mississippi, Ohio, South Carolina, the great state of Tennessee, and Texas.
Mhm.
Fantastic. And Monica, Princess Monica, you
I
service.
Yes, so I am licensed in the state of Tennessee. So I can work anywhere in Tennessee, but my primary focus is Middle Tennessee. So anything within about 2 hours of Nashville. I'm also licensed in Mississippi with Dorsey-Evans Realty, and I cover Central and North Mississippi. So yeah.
Okay. All right. Is there anything else you all would like to add?
I would. So, all jokes aside, partnering with someone that actually put you first is very important into a mortgage transaction because it's going to be typically the biggest purchase you ever made in your life. So if the realtor or the loan officer just wants to get you closed and get your money and just be done with you, it's not a good situation. So finding someone that fits you, it may not be me or it may not be Monica, but someone that you know that feels that has your best interest at heart, because if you don't do this every day, you can be taken advantage of. And you shouldn't just be a transaction just for money. You should be a lifelong partner or a friend to whomever you're doing this transaction, the biggest transaction of your life with. So you want to do your research. You want to make sure that this person is right for you, because it can hurt you in the long run. If the realtor say, hey, no, you don't need this home inspection because I know you don't have any money, that person is not looking out for you, versus like, hey, we need this home inspection because after this home closes and now is foundation issues, there's nothing we can do. You bought it. So
Mhm.
that's pretty much all I got to say.
Okay, and I do have other things to add. First of all, the home inspection, I think that people should be aware that it is your responsibility to pay for it up front. This is before you actually close on the home. And also, I would ask, like the fee of the mortgage of the loan officers, like what their fee is, as well as make sure that you read your contract with the realtor to know their fee. And if, say, for instance, the seller doesn't pay that fee, then you'll be responsible for it.
I gotta jump in here, and I know Alicia's talking partly on her experience, but
Yes.
the great thing about this is, as of August 17th, every real estate agent is required to have a buyer's agency agreement signed before we can open that door. Within that buyer's agency agreement, the buyer has to sign, initial, what have you, a box, or well, document that indicates that how we are paid. So we will go out and negotiate compensation for working with you. Um, Ask the seller or the listing broker to provide that compensation. In the event that they do not, it states in the contract that we can still you can still be required, and that's for a VA buyer, because VA changed it August 10th, I believe. FHA buyers, it can also be a part of the buyer's closing costs. Another thing too, during that buyer's consultation, when I'm going over it like a great realtor that I am, I got I'm just I make sure that they know what their upfront fees are. I
Yes.
let them know you need to have money for your earnest deposit. You need to have money for that home inspection, the termite inspection, the appraisal, because sometimes they may not be a VA buyer. And I know a lot of those appraisals are paid up front. You may need some money for closing costs. Now, with the mortgage and broker fees, all of that, when they do those initial disclosures, that's outside of my scope. That's more of Shedrick. They let you know what those fees are. The only way a buyer can truly say that they are not aware of what they are paying is if the agent that they are working with just pushed documents to them and did not go over it. But I go over it with them. That's why who you work with really does matter.
Do you have anything else, Mr. Shedrick?
Hey, this has been a pleasure. Thank you for the opportunity. So when you become this mega star, I can show this to my kids and say, hey, listen, I actually know that this lady.
Oh,
You already a star now. I said mega star. So and I'm gonna need to stay in contact with you a little bit more because I need all the dirt I can get on Monica. Okay.
and I got it to
I
give.
have a cease and desist in place.
I didn't sign it. I didn't receive it. I don't care either. I'll go to jail still talking. Well, guys, okay, now tell everybody to subscribe.
Yeah.
Tell
Yes.
them, okay, Shedrick, you tell them to subscribe.
Please like, share, and subscribe. This is a fantastic channel, and the information is something that you can take and share with your friends.
Okay. All right, now see you later.
See you later.